Alright, hello everyone. Welcome to my live stream. Got a little bit of a late start, kind of a hectic morning. The AM video edition of Trader's Espresso is recorded, it's processing, so it won't be accessible until that's done processing. The CPI number came out hotter than expected, as I mentioned. The futures sold off because that was at 6:30. Was it 8:30 a.m.? It was before the markets opened. And when the market did open at 7:30, the indices followed suit. And now they basically have reversed course. All of the indices are in the green, with the exception of the Dow is up like 5 basis points. I shouldn't say with the exception of, it's up, but marginally. The Dow futures are down, and the NASDAQ 100 futures, the S&P, and the Russell futures are all up. Anywhere between 9 basis points and 34 basis points on the NASDAQ 100. VIX is down. The VIX is down almost 18%. The VIX futures are down almost 4%. The 10-year Treasury index is up, but Treasury futures themselves are down. So the Treasury market, the cash market, is telling us that yields are down, but the futures market is predicting yields higher. Because when bond prices fall, when bonds sell off, that causes rates to fall. Or, sorry, to rise. Now, the dollar index was up substantially on that CPI number, and it's now down 20 basis points. Gold was down. Gold futures were down on the move. When I recorded the Trader's Espresso at about 9:30 Eastern Time, around there, gold was up 0.5%. It's now up over 1%. So gold is rallying, I think, as a safe haven, but also on this dollar softness, because the Japanese yen has been rallying. I mean, it was up overnight before the CPI number even came out. And then when the CPI number came out, if you look at the currency futures, they were all down because they're dollar denominated. But the yen was the only one that wasn't down. So the Australian dollar, the British pound, the euro, the Swiss franc, the Mexican peso, all those futures were down with the exception of the Japanese yen being up. And I was going to pull up my watch list for the futures. And the Japanese yen, it's been up about 50 basis points, so 0.5%. That's still right around where it's hovering. So that's where we sit. I want to take a look at what Autodesk is doing, what Apple is doing. So Autodesk is down on the day, 60 basis points. No doubt. I mean, it's recovered from its lows. Apple's down 0.1%. Also off of its lows for the day. Facebook, I can't figure out. The market opened and all the indices were down, and Facebook was up. I mean, right here from the open. just up 3% or $3 almost. I don't know if there's news. That doesn't really seem like an item that would cause it to cause Facebook to skyrocket. Stock rallies. Here it is. Stock rallies after analysts suggest being aggressive buyers. So what I may do in this case then, if I believe the thesis, is because this is I bought this put spread, so I can roll this short put to a lower strike to be bullish, collect more premium, be a net seller of premium instead of a net buyer of premium. So I could do that. I could just cover the position and buy calls or something of that nature. You know, on Autodesk, I need to just cover this call. And Apple I'll leave alone, because Apple, that's a call that, you know, expires on Friday. You know, see what it does today. I might just cover it. I might get rid of it at the end of the day, because I only got 2 days till expiration, and you know, I don't want to take the time decay hit. Yeah, I'm not going to mess around. I'm just going to cover this. So now I am net long Autodesk. I've actually kind of doubled down on it. I did make a small trade in the S&P futures right after the CPI number came out. It was kind of a risky trade, but fortunately, you know, it sold off aggressively, and I just quickly flattened it. I mean, you know, I was in the trade for maybe 30 seconds. Doesn't always work out that way. So with a price target at 240 on Facebook, So I'll let you study that chart for a minute. I'll be right back. So from IPO in May of 2012, so looking at it from this perspective, I mean, it is not oversold, overbought, out of its channel. And if that price target is a 12-month price target, which they usually are of 240, then that means Facebook hits 240 by October of 2019. A year from now, say February of 2019, this would suggest if it just kind of trades in the upper range there, it would only really be about 222. Okay. So basically, I mean, his thesis, and I can see it because have said this. Facebook took a hit after their earnings call in late January, and I think that the stock was unfairly punished. My belief was that it would continue to be so, that the market would continue to take it out to the woodshed, which is why I put on this short put spread, or sorry, long put spread, which basically was a bearish position on Facebook. The fact that this is a voice coming out saying, here's the reality, Facebook is still they still got a good business. Now's a good time to buy while the PE is low, while, it's opportunistic. So where do I think Facebook could be by May? Expiration, which is what I put on. Around 200. It's at 176 now. So between 192 and 200. So what if I sell at 195? Well, I give it time to redraw. Taking a long time to redraw. And what would be the worst case scenario? I mean, this here should be a level of support. So I should put my stop probably about here. Because my concern is like it can trade down to that level of support, but if it breaks through, maybe I should consider if it trades below the midpoint actually is more of a bear, like I'm wrong if that happens, right? So at 166 maybe, like that's time to get out. Yeah, I said 195. And I got a fill, which is good. I didn't have to go too far down. So Apple is helping. Autodesk is helping now that that was, well, I don't want to say it was it was neutral, but it was more bearish than bullish. So now I'm kind of doubling down on the bullish thesis. Now we just need, to avoid head fakes, we don't want Apple or Autodesk or Facebook saying, "Aha, just kidding. I'm actually going to start declining now." Which, if that were the case, it would be a decline in the overall market. Something would happen. Something would have come out. So yesterday I was sitting on a respectable profit number, and then largely because I had some good gains in the S&P, and then I decided I was going to be smart and trade the last 15 minutes and didn't go so well. So basically I went from a 200 and something dollar gain in my S&P futures to zero. I mean, like right at zero, which was negative because you figure transaction costs were in there too. We're part of that. Transaction costs were part of that as well. So I'm going to put my mic on mute for just a second. All right. Now we're seeing a bit of a sell-off in Facebook and Apple and Autodesk. Probably just a little blip. And that looks like at least Apple's recovering. Okay, just had some housekeeping to take care of. To post a video edition of Trader's Espresso. So this is interesting. I just caught that the EIA crude number came out, and oil's rallying on that because it came in lower than the build was smaller than they had expected. So whereas oil was trading in the kind of around the 58 handle, it's 59.5 now, heading back up towards 60. It looks like, because the expected number was 2.84, I think. 2.825, and it came in at 1.8. So about a million barrel. The build was about a million barrels smaller than they thought it was, and it was actually a smaller build than last week's number. Last week was 8.95, 1.895. So this is when the number came out right here, this big green bar. So it kind of traded up to this 59.81 level and then is selling off from there. Okay, well now we're seeing a sell-off in Autodesk. Debating about whether or not I want to make a play on crude. I think this is a buy. See, we have some support here at the 9-period MA. Although the picture in the stochastics is changing. Now indicating a bit more selling pressure. Sometimes you just can't win for losing. Looks like Apple's firming. Autodesk is firming. The dollar is continuing its weakness, and that's kind of a puzzle to me. Yeah, I'm not sure. I mean, is this just denial? I mean, I don't know why that would cause a dollar sell-off. That was a nice little push to the downside. My video is so washed out. I gotta close the curtain. So now it's almost too dark. Dow is flat. NASDAQ composite. Let me edit this chart because Dow's basically flat. NASDAQ and NASDAQ composite are both up 0.7%. SPX is up 0.25%. Russell's up 65 basis points. VIX is down. VIX futures are down. The Dow futures are down. The futures for the NASDAQ 100, the S&P, and the Russell are all up. Gold's up now 1.5. By that I mean 1.5%. Crude is now up 0.7%. Or not 0.7, 0.7%, so 7 basis points. The dollar's still down 40 basis points. The index for the 10-year Treasury is up while the 10-year Treasury futures are down. So there's some disagreement there. I would expect the futures at least to be down, given today's CPI result. What I would not expect is the dollar index to be down at all, quite honestly. I don't know if it's where the inflation came from. That's causing traders to dismiss the number. Because as I read it, it looks like a big component of that was energy prices. So if traders are dismissing a rise in energy prices as not really being, that's more of a supply demand issue than it is inflation in the economy. However, the the core number was still up, and it was up 20 basis points as well. I mean, it could be business inventories. There's a larger rise than was expected in business inventories, which people could be taking as a sign of a slowdown. So it's kind of a mix. So that tells you, on balance, it's a mixed picture. I didn't get a chance to read the article yet, but I saw the headline. Lloyd Blankfein, it's Goldman Sachs, was saying something along the lines, and I'm paraphrasing here, that having tax cuts plus infrastructure spending is like pouring lighter fluid on a fire or gasoline on a fire. So basically, he's saying this is going to overheat the economy. A lot of economists were questioning the need for tax reform. And I don't know whether the legislation that was passed could truly be called reform. It was tax decreases. So since about 12:30, the S&P futures have traded in, this is last night, and this is my time, so about 2:30 Eastern time. Futures, S&P futures have traded in this range. The CPI number came out and it plummeted, trading below even value area. And then it started this rise back up again until it got back into this range that it was trading in before. So for anything to happen in the S&P futures, they're either going to have to break up above or down below. I'm going to take out some of this noise. I think it's fair to say the bulls have the wind at their back right now. Short term, like very short term. Okay, risk is, direction is downside. But we have a 1 hour bar forming a bullish crossover. We have the 4 hour bar forming a bullish crossover. Because of this rally that we're seeing despite. So it basically is just resuming. This was just a blip. And the day chart. Crossover here is the first step. Crossover here is the second step. Crossover to the upside. There would be, that's kind of the line of defense that the bears need to defend. If they fail, then we're going to see a move to the upside. You can see the spike that average true range made. I mean, this was 630, and now it's just kind of drifting down. So a move back above that line, I think, would be a bearish signal. So I'll continue to monitor this. Anyway, folks, it's 9:37. It's already into lunch hour, 1:30 on the East Coast. So I'm going to go ahead and cut the stream here, and I will be back at 1:30 Eastern Time for the second session of the day. All right? Have a great lunch, everyone.